Welcome to 2019. I hope you had a great time with your family in the holidays and ready for an amazing year ahead. I'd like to take this moment and thank you all for your support and encouragement in 2018. I wanted to share my thoughts about some past and current trends in our residential real estate market in Toronto. Toronto Real Estate Board reported a total of 77,426 transactions in 2018 for GTA. This is a 16% decline compared to the 92,263 sales that we had in 2017. It is clear that the new mortgage qualification rules, several prime rate increases by Bank of Canada, and a series of well-planned announcements about the possibility of multiple interest rate hikes played a big role in discouraging a considerable number of buyers from taking actions and pushing them to the sidelines and making them watch to see what's going to happen to this market. The new listings entered into MLS in 2018 were 155,823, which is down by 12.7% comparing to the 2017 numbers. And if you look at the numbers of the sales to date, you will see that 51% of the 155,000 listings were sold in 2018, while this number for 2017, even though the number of sales was higher, but the percentage-wise was lower. The 2017 we had only 48% of the listings sold. I believe one of the major factors contributing to the decline in new listings is the fact that majority of sellers are not desperate to sell. The unemployment levels as well as the interest rates, in spite of several hikes in 2018, are still historically low levels. And people don't have to sell unless some people that they have reasonable means to sell, including the people who are upgrading, downgrading, or have to move out of the city. So people who don't have to sell, they don't come to the market unless they know that they will get the price that they're expecting. Otherwise, they stay until the market catches up with what they are interested in. The overall average price for 2018 was $787,300, which is down by 4.3%. Keep in mind, this is for all home types combined across the Greater Toronto area. Let's look at how did the price drop happen. To have a clearer picture, let's look at the 4-year monthly average price chart that we have prepared for you here. This is from January 1st, 2015 all the way to the end of December 2018. First of all, it's very interesting to see the typical peaks and valleys of the GTA market. You can see it in 2015 and 2016. In the normal market, right where we were here, prices start in a month-to-month increasing trend from January all the way to the May, which is the peak usually. And then it gradually goes down from May to August. After that, it picks up in September and then a slight upward trend in October and November and goes down in December. And it repeats again the same way here. This is the normal Toronto real estate cycle that we usually experience. We can clearly see that the trend in 2015 and 2016, and then a completely out of whack market in 2017, and then back to the norm in 2018. You can also see the reason behind this decline in 2018 was the extremely inflated prices of the first 3 months of 2017. Those unhealthy months of 25% plus price increases caused overall average price inflation in 2017. Therefore, the 2018 normal market fell short by 4.3% comparing to this unusual market in 2017. Now I would like to share some of my observations in this market with you. After the huge price spike in early 2017, followed by the steep decline of the prices in the same year, it didn't take too long for the sellers to accept the fact that those unreasonable high prices will not be achievable, at least in the near future. They are either willing to sell with the current market price or hold on to their homes until the market catches to their expectations. But in the buyer's world, there are still a considerable number of investors that are holding off their purchasing and they're waiting for the market to go down more. These buyers are not paying attention that, first of all, market has already tanked in August 2017. And since June 2018, every single month's average price in 2018 after June, July, August has been higher than the average price in 2017 of the same month. This group of buyers are still crossing their fingers and hoping for the prices to drop. I think these people might regret that they didn't buy when they could take advantage of the decent prices and reasonable inventory, of course, in some areas. As you might be aware, some central Toronto areas have already started to see multiple offers and we are experiencing lack of inventory in some neighborhoods. Now let's get a little bit deeper in the micro markets. We have noticed that the home prices were up very slightly in the city of Toronto in 2018 and down in surrounding GTA regions. Price growth was strongest for less expensive home types such as condo apartments, condo townhomes, freehold townhomes, and semis. The average price for the condominium apartment across the GTA was up by 7.8% year over year. And this segment performed better than the detached segment from the price point, basically. The rapid acceleration of the market from late 2016 to the spring of 2017 changed directions abruptly after Ontario's Fair Housing Plan in April of 2017. Although this correction resulted in lower than normal sales volume last year and price declines in some micro markets of GTA, it was overall a healthy year in real estate for us. It is true and unfortunate that some end users suffered from the sudden price changes, and it's also true that some industries got impacted by the significant drop in the number of sales in 2018. Many industries like us as realtors, mortgage brokers, real estate lawyers, banks, and other lenders, CMHC and Genworth, the two main mortgage insurers, construction industry, and so on. So the list will go on and on. But I believe we should be all happy that we experienced a soft landing as opposed to a hard crash. You know, some of us might be experiencing some challenges in this market. However, if we look at the big picture, this type of healthy market is the type that is beneficial for all of us in the long run. Here are some of the positive market and economic facts that I would like to complete my talk with. Over the past 5 years, the average price appreciation is approximately 8% per year, which is way above the 35-year average of 6.57%. Unemployment levels are at 40-year lows. The city continues to grow with over 100,000 new people settling in this area every year. Interest rates, even with recent increases in 2018, are at historically low levels. These fundamentals are what drive a healthy real estate market. If you have questions about any specific micro markets, your area, I would be happy to have a chat with you. Message me here or give me a call and we can sit down and chat. Once again, thank you so much for being with me in this video and wishing you all an amazing year ahead. Have a great year.